Hello everyone, welcome back to the channel. Today in this video, we are going to analyze the upcoming IPO of Clean Max Enviro Energy Solution. In this video, I will cover company overview, revenue, EBITDA, PAT, debt position, valuation of the company, IPO details, and finally, my opinion for short-term and long-term investment perspectives. Before we start, don't forget to subscribe our channel for IPO details and stock market updates. So let's get into it. Company overview of Clean Max Enviro Energy Solution. It was founded in 29 September 2010. The founder was Mr. Kuldeep Jain. Industry is renewable energy. The company operates four major countries like India, UAE, Thailand, and Bahrain. Headquarters is in Mumbai, which is in Maharashtra. The major office locations in Mumbai, Pune, Bangalore, Chennai, Gurugram, Hyderabad. Projects presence in renewable energy projects in 20 plus Indian states. Large scale solar farms, wind power projects, hybrid that is solar plus wind plants, corporate rooftop solar installation. What the company does? Primary business develops, owns and manages renewable energy projects including solar farms, wind farms, hybrid that is wind plus solar plants and energy storage solutions. Business module develops, owns and operate solar, wind and hybrid power plants, supplies renewable electricity to corporate and industrial clients, signs a long-term power purchase agreement that is 10 to 25 years. Clients pay for power used stable recurring revenue, also earns from operation and maintenance services and carbon solutions. The key services that they are rendering is renewable power supply under long-term contracts, engineering, procurement and construction services, operation and maintenance, carbon credit and decarbonization services for corporate clients. Industries and growth. The renewable energy industry is growing very fast in India, driven by government targets and rising corporate demand for clean power. This creates strong long-term growth opportunity for companies like Clean Max. The company promoters currently holding around 75% before the IPO. After the offer of sales, promoters holding is expected to reduce to around 49% for improving public participation. So these are about the company profile. Next, we will move on to the financial analysis. Revenue from operation. Revenue from operation is increased year after year. Half year to the financial year 2026, it is showing rupees 932.9 crores, which means it will continue to operate in future. PAT. So company moved from loss in financial year 2023 to 24 to profitability in 2025. The next, EBITDA. EBITDA improves strongly. It reflects better operational efficiency and the total asset is also increasing year after year. It shows double over 3 years. Net worth is also increasing year after year. It shows expansion of the company. Then the reserves and surplus is also increasing year after year. It shows the retained earnings of the company and profitability of the company will be continuing financial year 2026, and total borrowings is also increasing year after year. It shows high financial leverage, which means high risky. The next is key financial ratios. ROE. In 2024, company faces losses in this year, so it could not generate the return to the equity shareholders. Of year 2026, it shows 0.43% to 0.73%. which means it is less than 1%. That means the company is not generating strong return to shareholders. Return on capital employed. In 2024, it is 6%. In 2025, it is 7.39%, which means company is underutilization of capital employed. Then the earning per share. In 2024, it is 3.94 to 472.77 rupees. In 2025, it is 2.88 to 424.71 rupees. In 2026 off year, it is 1 rupee 1.09. Debt to equity. So debt to equity in 2024, it is 1.97 to 3.01. In 2026, it is 2.53 to 3.90, which means debt to equity is greater than 1, which is high financial risk. Book to price to book value. So in 2025, it is 4.20 times, which is increased, and in 2026, 4.11 times increase, which is pre-IPO. Peer comparison table. The Clean Max Enviro, the PB value is smallest in the list, which means the Clean Max asset is cheaper than the other asset. PE ratio is greater than the list, which means the company growth expectation is huge in future. Debt to equity ratio is higher than the list except Adani Energy. It shows higher leverage, which means higher leverage, higher risk. Return on equity. Return on equity is lesser in the list, which means the return of the equity is lesser in this company. Next, IPO parameters. Total issue size is rupees 3,100 crores. Fresh issue is rupees 2,200 crores. Offer for sale is rupees 900 crores. Price brand is 1,000 to 1,053 per share. Face value 10 rupees per share. Lot 14 share per lot. One lot is amount rupees 14,742. Next category, qualified institutional investors is 50%, retail investors 35%, for institutional investors is 15%. Use of IPO proceeds. The purpose of IPO is for debt repayment, fund capital expenditure, investment in subsidiaries, general corporate purposes. IPO events. IPO opens for subscription is on 23rd February 2026. IPO closes for subscription is on 25th February 2026. Basis of allotment finalized is on 26th February 2026. Shares credited to demat or refund is on 27th February 2026. Listing NSE or BSE is on March 2nd 2026. GMP 17th February 2026, GMP was 19 rupees and GMP trend was increased and gained 1.80%. On 18th February 2026, it was 9 rupees and increased trend gained 0.85%. In 19th February 2026, it was 7 rupees and declined GMP and it was gained 0.66%. On 28th February 2026, it was 5 rupees and declined GMP trend and gained 0.45%. Clean Max is a growth story, not a profit story. Valuation is expensive, debt is high, return is low. So we can have a look for long-term investment perspectives. What's your opinion to invest on Clean Max IPO? Comment below under comment box and don't forget to subscribe the channel for more notifications.